Today, we are going to talk about uranium. Uranium is a trendy topic right now, a lot of public opinion on the nuclear power side of things. And I cannot think of anyone better to talk about this topic that Scott MELBYE. Scott has come several times to our show. So thank you, Scott, to come again.
Well, Luis, it's great to be on your show, and it's great to have so many happy uranium investors these days. You've been talking about the narrative around nuclear energy and uranium for some time to your audience there, and it's really exciting to see things really coming together, both for nuclear energy and the uranium price and the uranium industry.
For sure. And a lot of things are happening. The first thing that I wanted to pop up was you've been in COP28. What were the key takeaways of that meeting and moving forward? What was your opinion?
Oh, it was truly incredible to be there and be in person, because really these COP meetings through the years, these have not been very friendly to nuclear, and it probably was only 5 or 6 years ago that nuclear energy was not even welcome at these meetings. There's various zones of access when you're at COP28. There's the blue zone, the green zone. We weren't even in the taxi zone. We were, uranium and nuclear was out on the curb with the protesters. And now this year in Dubai, we were center stage, and really the highlight being over 20 world leaders declaring their support for a tripling of nuclear power in the coming years, and then 150 companies, including Uranium Energy Corp and Uranium Royalty Corp, that got up on stage and pledged our support to help realize that vision. It's not enough for the governments to set the aspirational goals. It's up to the bureaucrats and people in the regulatory bodies within those countries to kind of get with the program. And obviously, most importantly, industry needs to step up their game to meet that realization. But it's just a realization that we cannot make any serious reduction in carbon emissions without a serious commitment to nuclear power. In my discussions there, I didn't hear a negative word the whole time I was in Dubai about nuclear power. And I think those that even advocate strongly for wind and solar realize that, having a carbon-free 24/7 backup allows wind and solar that are intermittent to be part of the mix. They actually are complementary, not exclusive. So I think it was a really great meeting, and tripling of nuclear power means a tripling of uranium demand. So the industry needs to get busy in building some new mines.
Yeah, that's what they report. They want to triple the energy by 2050. And what you said, it's real. I mean, I was in ADIPEC in Abu Dhabi, close to Dubai, for the last 3 years, and there was zero uranium companies or uranium talks at that meeting. So hopefully the public opinion is keeping stronger, and there are more events like this, so companies and speakers can show up and say, okay, we really need nuclear. Let's start talking serious thing, not just solar and wind. Let's put nuclear energy in the mix. So that's come to fruition. Maybe we started in Dubai, maybe we can go back to the US with the news that has happened really recently. In the US House of Representatives, they want to they did ban uranium, Russian uranium. What's next? When will it become law? How will it affect? And one thing that retail investors are missing, is it only for Russian uranium, or is this also Kazakhstan, Uzbekistan in the mix?
Yeah, no, great question. And it has been a very exciting time on Capitol Hill in Washington, D.C., where we're seeing unprecedented bipartisan support for nuclear power and uranium and the nuclear fuel cycle domestically. So 2 big initiatives have been moving their way through Congress. One is the Nuclear Fuel Security Act, which was passed by the House and the Senate and is now going to President Biden's desk for signature into law. Why is that important? Because it expands and extends the strategic uranium reserve into a strategic enriched uranium reserve with the intention of incentivizing uranium conversion and enrichment capabilities in the United States. Why is that important? Because of the reliance that we found ourselves on from Russia. 20 to 25% of our enrichment comes from Russia. 50% of our uranium conversion our uranium comes from Kazakhstan, Uzbekistan, and Russia. So with the events in Ukraine, it's become evident that kind of reliance is dangerous and not something we should rely on going forward, including for advanced reactors as well. So the second part of that is the Russian uranium ban. And, it's interesting that we banned coal, oil, and gas in the United States from Russia within weeks of the invasion, and only now getting around to banning Russian uranium. That's why, because we have been so dependent on that. And I think many members of the House and Senate wanted to make sure that this Nuclear Fuel Security Act passed first, or at least concurrently. And once that passed and they saw that there's sufficient incentive for our industry to kind of regain our previous stature, then they'll vote for the ban. And so in the House, it was unanimous. In the Senate, late last week, it was brought for a unanimous consent vote on the floor by Senators Barrasso, Manchin, and a couple other senators stood up in support of it. Unfortunately, one senator spoke up and put a hold on the bill. And unfortunately, it's Ted Cruz, who is from the state in which Uranium Energy Corp has uranium operations. He understands the issue. And as it was explained on the floor of the Senate, he said, this does not have to do with the ban from Russia, and had everything to do with his provisions not being included in other legislation, which had to do with the permitting and licensing of semiconductor chips, factories and capabilities in the United States. So I'm sure a very important issue, but he's basically holding up the Senate ban on uranium for his to put pressure on his issue to be passed. So unless there's some resolution in the next couple days, Senate's going home for the Christmas season at the end of this week, and then it'll just roll over into the new year. So again, I think we should take it as a positive. We have unanimous support in the House. We had essentially unanimous support in the Senate, including Ted Cruz, but he's holding it up for reasons unrelated to uranium or nuclear power. So when that is resolved in the new year, it would move to ban Russian uranium, enriched uranium coming from Russia within 90 days, with exemptions for utilities that could demonstrate that the loss of that Russian enriched uranium would cause their plant to shut down. So there are some safety measures here that if someone was impacted, they would get a waiver. But but under all circumstances, Russian uranium is completely banned by the end of 2027. In answer to your second question, it does only apply to the Russian Federation, but you recall that most of the enriched uranium that comes in from Russia contains uranium from Kazakhstan that's been enriched in Russia. It doesn't impact direct imports of Kazakh uranium to the US or Europe, but those are also being impacted just by the level of sanctions on Russia, the ability to transport uranium through Russia to Europe and the West is becoming harder and harder. And so Kazakhstan has had to look at transporting through the Caspian Sea and out the Black Sea through 5 countries in Central Asia. And that has proven very expensive and very difficult and can't be really replicated with large volumes. So to some degree, Kazakh uranium is being restricted by those constraints put on by Russia and their status. But we also have to remember that going forward, Russia now controls half of Kazakh uranium and needs that uranium for their strategic needs. And the Chinese are making huge inroads to control the other half of supply through direct ownership, long-term contracts, and a kind of a trading hub across the Kazakh-Chinese border in Alashanka, which will direct more uranium to China and less to the West. So the bottom line is it's a long answer, but I don't think we should and can rely on Russia, Kazakhstan, Uzbekistan going forward in the same way that we have in the past.
Okay, yeah, and with with that answer, I think about two topics. The first is how will it affect, like, do you think that will have a material impact on the spot price or the long-term price of uranium, or is just okay, those pounds are not going to the west, they are just going to go to the east, and it will find a house, and the price it will not affect. And second, I think some colleagues of you at Uranium Energy Corp said on Twitter, okay, if the Senate bans the uranium from Russia, Putin will take measures and stop sending uranium to those utilities that really need uranium, so they don't shut out.
Yeah, on the second question, there were some rumors that the Russians were threatening that they would retaliate and embargo the exports of uranium to the United States. And I can tell you, with the members in the House and the Senate that I spoke to about that threat made by Russia, that only galvanized support for the ban.
Yeah.
The United States can't be held hostage and be subject to threats by Russia for energy supplies. It's very similar, to Europe with natural gas from Russia. They can't be in that position to be, threatened in that way. So, there was other reports that said, well, the Russians weren't going to cut off supplies. But I think it just highlights that the sooner we can get off that Russian over-reliance, the better. In terms of the market impact, if we take the world as one global market, we have a 50 to 60 million pound deficit between what the world consumes each year and what it produces each year. So globally, we're in a deficit, and that assumes the Kazakhs producing at close to 60 million pounds a year. If we have a bifurcated market where it maybe divides on BRICS lines with Russia, China, India, and a couple others kind of going into that camp, well, I'm pretty sure Kazakhstan goes into that camp with the borders they share with Russia and China and their desire to control those resources. So really, it amplifies the deficit in the United States. And so there is a need for mines to be built in the US, Canada, Australia, parts of Africa that aren't under Chinese control. So I think you're seeing that reflected in the uranium price, where we now see prices above $86 a pound. That structural deficit in the past didn't matter that much because we had lots of inventories, and the inventories would moderate the price increase in the spot market. Well, now we need new mine production. It will come. I mean, economics work, and those price signals will signal more uranium mine production. But unlike copper, gold, or silver, I think it'll be a longer ramp up for that new production to come online. So I think you're going to see higher uranium prices for a considerable period of time until the industry can respond to the shortfall.
Yeah, exactly. Well, the supply demand deficit has been here for quite a long time. For example, the 2010s, let's see, deficit supply market, the inventories were overhead, they cut prices from the east, from Kazakhstan. Well, low prices for longer. Now we have, let's say, phase two, if we wanted to call it. The demand is increasing. The small modular reactors are a reality. Maybe we can touch a little bit on that. Reopening existing ones in Japan, maybe in Germany. Utilities need to buy, right? So where do you think we are here in this cycle? And you said that supply will eventually come to meet the demand. Do you really believe that? And how long will it take? Because now there's a structural deficit in the market.
Yeah, well, again, uranium is not as an efficient commodity as other kind of base and precious metals. So, in copper, you might have a much faster response with mines that are on standby to produce copper into a higher price environment. With uranium, we really don't have that. So, we all have visibility to a handful of mines that can respond more quickly, like UEC in Texas and Wyoming, maybe like Boss in Australia or Langer Heinrich in Africa, these mines will respond and come online. But we need 5 or 6 more mines like that, which may require that they be built and started up, for the first time. And so you see how hard it is in, say, Niger, where Global Atomic has a great deposit and has a wonderful plan to mine uranium there. They've already started constructing the mine, but then they're being slowed down by the political situation in Niger. But even existing mines, like Cameco has reported that it's not easy for them to meet their targeted production in Saskatchewan because of supply chain and workforce issues. So I think we have to be realistic that the ramp up, won't be rapid, and it could take several years for the market to see sufficient production. And as you mentioned, we're used to having the demand line more or less static. Well, now the demand line with new reactors, with SMRs, is now going up. And so the gap is widening from the demand side for the first time in quite a while. So yeah, this is challenging for utility fuel buyers and for the market participants, but for the investor, I think this creates a very attractive thesis. Whether you're investing in the individual mining companies that are going to be the ones getting into production and supplying at high prices into those markets, or if you're investing in the commodity like Sprott Physical Uranium Trust or Yellowcake, or things in between like Uranium Royalty Corp or the ETFs, which are more of a broad basket of diversified uranium investments. I think all of these classes are going to do very, very well. And we're in a very early stage of a sustained bull market.
Yeah. And yeah, for the investor, it's actually the fun part, right? When when the commodity that you have exposure goes up and the equities goes up, then we can touch in deep of what I believe is the best company right now in the uranium sector, my humble opinion. But first of all, I want to touch one thing, that the supply, demand, the other part is the price, right? Some people don't really understand how high prices can economically go. In other words, what is the elasticity and the malleability of uranium prices? I know that in a recent interview, I saw that you made a 120 million sale when the prices were in the top of the last uranium market. Yeah. So do you believe that utilities at the end can afford to pay a 200, 300, 400 uranium pound, or how high can these prices go?
Yeah, so here's the good news is that uranium demand is quite inelastic. So it a nuclear plant that's running 24/7 must run on uranium. So fuel buyers need to buy uranium. They're not going to shut down the nuclear plant and run something else or subsidize. You can't substitute another fuel into the nuclear power plant. The other point to make is that it is somewhat price sensitive, not completely, but remember, uranium is 5 to 10% of the generating cost of the electricity from nuclear power. So if you have a doubling of uranium price, it will have a minimal impact. It will show up only marginally in the rates that they must charge residential or commercial ratepayers, or it will have a minimal impact on profitability. I'm not saying no impact, but it'll be very small. If you are getting electricity from natural gas, 75% of the cost of generating that electricity is the fuel itself. So if you have a doubling of natural gas prices, it prices that electricity out of the market. So again, I don't want to belittle it. The utilities do have a fiduciary responsibility to their ratepayers and their investors to buy uranium for the best price they possibly can. But the good news is that uranium can go from $80 to $160 a pound, and it really wouldn't change dramatically the economics of nuclear power, and that's a good thing. I think in some battery metals applications where you might be able to substitute lithium with vanadium, with nickel, and you have other substitutions that may be able to be used to create batteries. Uranium, really is not in that situation. So again, and I think to the utilities that may not like the higher prices, I think in the end, this is going to stimulate investment in uranium mines around the world that will ultimately be good for them. They'll have more supply diversity and more mines built. We had a period of time where there was no incentive to even operate existing mines in the West, let alone build new ones. So now, you have companies now taking steps like Uranium Energy Corp, to go back into production next year, and other mines, have announced as well to be in production in 2024. So it's a good thing. It may not seem, it may be painful for some of those utilities to pay some of the high prices, but again, they should have been strategic up to this point too, and hedged their price exposure and their supply risk if they're doing a good job of being a fuel manager.
Yeah, exactly. And yeah, and there is one, maybe I can share the screen here. Here. Because there's one page in your report. Well, first of all, since we first met, the Uranium Energy Corp stock has done an amazing job. This was when uranium prices had to go up, and as we thought, the elasticity of the price can really go. So minimal downside, a lot of upside. So that's why, first of all, I was a very investor in Uranium Energy Corp. Now I want to talk Uranium Royalty Corp because I do believe it has the tremendous value right now. This is what Scott is referring to. The utilities at the end needs to buy the procurement cycle. It has to happen. And then if you throw into the mix the speculation from Sprott for another mining companies, for Yellowcake, and this hasn't come to the Reddit crowd yet. And the uranium sector, I do believe that has the narrative potential to be the like the cannabis it went in 2017, the cryptos were 3 years ago. I don't know if this is a good thing or a bad thing. What I do really know is that for a company that needs the NAV to be higher to purchase uranium and royalties and streaming, I think this is going to be really, really beneficial. So why don't you talk a little bit of Uranium Royalty Corp?
Yeah, absolutely. Well, and as you mentioned on UEC, it's very easy to see why the shares have performed so well. I think one of the top gainers in the uranium space year to date, or at least in the last 6-9 months. So UEC is building mines that'll can be in production within 6 months to a year, and I think you'll see announcements coming along those lines in the coming weeks. But has low cost production in stable jurisdictions and an unhedged book where the price upside hasn't been contracted away. It's still open and allows the shareholders, the investors in UEC, to get the highest price possible. And also, UEC is very liquid stock, where you have 8 million shares a day trading on the New York Stock Exchange, and 2.5 billion market cap. So URC is interesting because it's a little bit different way to invest. It's more of a diversified approach. So we don't own the mines that we invest in. We just have financial interests in their successful production. So the royalty allows us to get paid a percentage of the value of production when a mine goes into production. A stream allows us to get paid in physical uranium, which we really love, and add to our physical uranium holdings. But it's a very efficient way to invest, usually at the top line, at the revenue level, but we do have net profit interests where we are exposed to some of the costs and the normal things that companies would face. But most of our royalties are on the gross revenue of production. So that insulates you a bit from inflation and, costs rising in terms of these mines starting back up. But, if UEC is needed, to come into production next year, we probably need, eight or nine more coming online around the world. So URC wants to be the investor to come alongside those companies, whether they be in Australia, Africa, Canada, the US, and provide them financing, 30, 40, 50 million or more, to help them get into production, and then in exchange will take that royalty interest. It's good for them because they can finance their mine development without issuing new shares, which causes dilution and other costs with bank costs and commissions. And it also is better than debt with the high interest rates and the covenants that comes along with. So we're very active right now with a number of companies around the world that are in that situation. And so, not only does the existing portfolio of 20 royalties on 18 mines around the world look very attractive, we're very actively pursuing new royalties and streams that can grow the portfolio. And, if we have 20 royalties today, I want to have 25 royalties by this time next year. And we just continue to grow like Franco-Nevada, Wheaton Precious, Sandstone, Royal Gold, these royalty companies. So it's a very exciting time. And then, we did have a $30 million raise, successful bought financing recently, of which we immediately went out and bought 1 million pounds of uranium at an average cost of about $70 per pound. We're now at $86 to $88 a pound. We love, we can't buy enough uranium in this market that we've been in. But, ultimately, that uranium that we hold, and by the end of this month, we'll have 2.5 million pounds of uranium on our account, which is worth more than 220 million. That's a lot for a company whose market cap in US dollars is around 300 million. But that should be viewed as, well, obviously, when we sell it, it will generate a nice trading profit and a gain on that asset. But it also represents a cash war chest for us to invest in royalties and streams. That's our main focus. We couldn't resist investing in uranium off the bottom of the cycle. And as you know, it's been quite a successful strategy. But ultimately, that cash will be, that uranium will be turned to cash to be invested in royalties. So we can handle a number of acquisitions from our own balance sheet without having to go back to capital markets. But, eventually, if there's big opportunities of $100 million or more, we would come back to the market and raise for that purpose. But remember, that's very purposeful financing, where it's money raised that goes to accretive acquisitions, very little G&A and overhead in a royalty company. The company only requires $5 million a year to fund all the personnel, the office space, the listings on the stock exchange and NASDAQ and TSX. So it's a very efficient model. So any money that we have raised has gone to accretive acquisitions. But, for the time being, we're in pretty good shape. We can fund our own royalty acquisitions through the balance sheet strength that we have.
Yeah, something that surprised me is that 50% of your market cap is right now in cash for those growth plans. It really amazed me that you said, for this time of the year, next year, I want to have 5 more filings. You touched a little bit about maybe Boss, Global Atomic, I don't know, some names come to my mind. And well, grow the plan, grow the portfolio in an accretive manner. Something also that surprised me is I don't know if you have the numbers off top of your head, but can you tell us the enterprise value because you don't have debt right now, you already paid it. What's the enterprise value and what's the price to NAV? Because last time that you were here in the channel was 6 months ago. Uranium Realty Core, you said UEC was trading at 0.5 price to NAV.
Yeah.
And the stock just doubled from that those 6 months.
So I think we're trading now at around 1 times NAV or 1.1 times NAV based on the analysts published valuations. So that's great. But, typically royalty companies trade at a, 2x or greater P to NAV because of the unique nature there. So I really do think that we're due for, I think, a re-rating. I think the uranium price and our uranium holdings has gone up so quickly that the market hasn't repriced us with that into account.
Yeah.
I can tell you the royalty portfolio outside of the uranium is worth more than 100 million. So we're at an interesting stage here where and we've seen nice appreciation since the time we talked. I think we've been the #1 royalty and streaming company in the resource sector over the last 6 months. I think outperforming all the other base and precious metals royalty stocks over that time. And I think even if you go all the way back to our IPO, we have 160% gain over our IPO level in December of 2019, which also leads all all mineral resource streaming and royalty companies. So again, that's great, but it's not where we want to be either. We think this company can grow dramatically, and we'll see the share price grow with both the activities that we're taking in terms of new acquisitions, but also the exciting developments that we've talked about in the uranium market. So I think definitely we're probably undervalued given what we have in the asset in the books to date. So I would expect further appreciation.
Yeah, me too. I don't know how analysts took the 1.1 price to NAV, because on the September, I think was it the September presentation on your website, you had a 0.8 price to NAV, and the spot price has moved from 60 to 80. So I don't really understand how is that calculated, or who calculates that.
I think something too, Luis, is that remember that very few analysts, not just the analysts that cover uranium royalty, but all banks and brokerage houses that produce research reports on uranium companies, very few of them, only a couple, 2 or 3 of them, have revised their price decks. They may be using uranium prices to value the uranium companies using a $60 uranium price. Well, we're now at $86, $87, $88 a pound. And so as banks and brokerage firms revise their price decks, you should see a across the board re-rating just from the improved price outlook.
Yeah, exactly. I mean, let's say your enterprise value is roughly 100 million at these spot prices. I mean, maybe, so the enterprise value, for everyone know, is the value that we are paying, the investors are paying for this company. Now, is it worth more than 100 million? Okay, can we dive a little bit on some of your royalties so people can really understand what do you have in your portfolio? And let me show you here the presentation. Is it really funny that you have everyone? I sent you the meme, maybe I posted in this video, because it's funny enough that you have royalties on MacArthur and Cigar Lake. These are the big royalty names, big mines from Cameco. It's really funny how you got those royalties from Frank Melfi. Maybe you can touch a little bit of how much
that was
you paid.
It pays to have a deep knowledge of the space and decades of experience. But you're right, we were able to acquire these royalties on MacArthur and Cigar from a company that was involved in the early exploration in the 70s and 80s, and were being held by a gentleman out of New Mexico, Frank Melfi, who ran Reserve Oil and Minerals for many, many years. They sold the royalty interest to us for $11-12 million, half cash, half shares. But just to give you an idea, these 2 royalties within, I would say, 3 to 4 years, can be paying out $6 to $7 million a year just on those on those two royalties. MacArthur isn't, is in production and is paying out under the royalty as physical uranium. So we'll get book transfers of uranium to our account equal to our royalty percentage. And Cigar Lake is a net profit interest. So we're not, while it is in production, we're not receiving payments under the Cigar Lake royalty yet until the profit interest calculation works through some of the expenses that are overhanging it. But I think the more they produce, the higher price they sell at, the faster that calculation will produce net profits interest to us, which could be, $5 to $6 million a year at full production. And of course, it's also benefiting from any extension of Cigar Lake. So if Cigar Lake Phase 1 comes to an end, but Cigar Lake Phase 2 continues operations there, we continue to benefit from that mine. So those are just two really great examples. Rough Rider's another one. It's not going to pay off immediately, but under the ownership of UEC now, and they bought that from Rio Tinto for $140 million. They're in the process of updating an economic study that will be issued shortly that will talk about the potential, the annual production, the timelines, the startup potential, milling options for that Rough Rider deposit, which I think will be mined sooner now that it's in UEC's hands than it would have been under Rio Tinto. So that's a full 2% NSR on the total value of the uranium produced from that mine that can produce 5-6 million pounds a year. So you just keep adding these royalties to the portfolio. Other ones that are kind of nearest term to cash flowing, Langer Heinrich. Well, this one, USISR, Lance, is working their way towards commercial production within the next year or two. We have 1% on the whole project and 5% on portions of that deposit. So that's a good one. Dewey Burdock is Encore Energy. They're focused first on Texas, but we'll look to develop their South Dakota mine before too long. Church Rock, a very nice 4% NSR on an ISR mine in New Mexico, not conventional mining. And Reno Creek is the next mine for UEC after Christensen Ranch or the Christensen Ranch deposits are depleted. And then on the next page, conventionally.
One thing that I would like to mention really on the ISR royalties in the US is that this can be the fastest to produce. So this is like they have the cash flow, it will come a lot earlier than Rough Rider or some others. Well, for sure, MacArthur and Cigar are going to be the first one. But for example, like this one that no one talks about, no analyst, I mean, this is 150 million PEA from the PA, and you have a 30% NPY. So this is like a lot of value that no one values and puts right in the top of the head. And sorry for
ISR is really, I mean, these aren't the biggest mines in the world. They tend to start out at 1 million, 2 million pounds a year, but they can grow with higher uranium prices just by increasing the well field development and drilling, just increasing that. It's more scalable than a conventional mine. And but they are the early movers. They're, a well-run US ISR operation in the United States is first or second cost quartile. So, we love ISR. We'd love to do more in this space. On the next page, we have an interest in Langer Heinrich, which is obviously starting up by the first or second quarter of next year. Michelin is a huge 100 million pound deposit in Eastern Canada, which Paladin has been consolidating ownership on. So, we're quite happy with the initial royalties that we have in the portfolio, including all the ones in the Colorado Plateau and Arizona, New Mexico, Utah, and Colorado. They'll all play into one shape or form through the Energy Fuels mill there, blending, or benefit from rare earth minerals or vanadium. So anyway, we've got a great inaugural royalty portfolio. But the name of the game for me and management is to acquire additional royalties in the secondary market, if you will, existing royalties and streams. or establishing new financings. And most of those that we're in discussions with tend to gravitate towards streams, which is interesting. So, you know, a minor developer doesn't need to encumber many pounds into the future to get a meaningful amount of capital today. 30, 40, 50 million pounds can be received today to complete the mine development plan without diluting shareholders, without getting into onerous debt terms and covenants. So we really feel like we've got the right model and the right commodity at the right time, and we're cashed up. Again, we're not just sitting on cash, we're sitting on uranium, which is appreciating, but can be turned into cash to invest into royalties.
Yeah, right, exactly. And one thing that purchasing uranium, there are, for example, the Sprott or yellow cake, and when I see an investor analyst saying how to play the uranium market, they go to those names that they're great. I mean, they are really great. But if you only want to choose, you want to go for the real alpha and go for the where is going to be the alpha in the market. I mean, and maybe I'm not right, but maybe you can put a better picture in this sentence.
Yeah, no, I mean, listen, I'm a uranium bull. I have been for my entire career. So I think if you believe in the nuclear energy story, and you believe in uranium, you'll hold a portfolio or five or six uranium companies. Why wouldn't you?
Yeah.
But you know, I mean, Cameco is a great investment that everybody goes to because it's easy. It's large, it's stable, it's conservative, but it's probably not going to give you the most torque or alpha to the uranium developments if they've hedged their book forward, if they've become more of a nuclear energy company. I think they're going to be the world's leading nuclear energy company at the rate they're going. And that's a good thing. But if you want direct exposure to the uranium, you're going to do better with, you know, the UEC, you know, kind of torque, the unhedged near-term production story like UEC. I think URC, you know, presents that pure play exposure in uranium, but it diversifies your risk. Amongst our portfolio, some of our mines that we hold interest in are going to outperform, some are going to underperform. But if we're doing the right due diligence, we have more winners in that portfolio than losers. And I think, you know, that structure has shown to be in other commodities. The royalty companies have outperformed the mining company equities in many cases over recent history. So I think those are two great names, but I would hold them in a portfolio along with, there's nothing wrong with holding Sprott Physical Uranium Trust or Yellow Cake, or have some pure commodity exposure. Hold a couple other of the miners in the portfolio, and I think you'll do very, very well, you know, with a basket of uranium equities right now.
Yeah, when Scott says hold physical uranium, he's not referring to the real physical uranium. Invest in a Sprott or yellow cake uranium, let it be to the experts and the facilities in place. And one thing that probably we can close with it, would you say that you have a better purchasing power than any other trust like a Sprott or yellow cake? Because I mean, royalties usually trade above NAV, right? 2, maybe 3 times price to NAV if you get a really good promotion and the stock goes up. And those other names are going to trade at 1.0 something, right? 5% premium, 10% premium. Would you say that you have better purchasing power and also the contacts of 40 years of experience in the sector?
Yeah, I mean, I think, you know, we have traded at a bigger premium than we are today, and we found that to be very effective to raise at a premium to NAV and buy uranium either in the form of shares of Yellow Cake or Sprott. Sometimes they're trading. You can, you know, raise money at a premium to NAV and buy those two companies at a discount to NAV, which is very smart. But sometimes too, we may sell out of Yellow Cake and buy physical, so we can move in amongst. But listen, those are good vehicles to give pure uranium exposure. We like the uranium trade. We've loved it over the last 4 years. It's been a very lucrative investment for us. But I think it is important to note that we don't want to compete with Sprott or Yellowcake as a physical uranium ETF.
Yeah, for sure.
We want to be a royalty and streaming company. So did we take advantage of a unique circumstance and situation? Absolutely. And it's really been the right decision.
Yeah.
But I think going forward, look for us to invest more in the royalties and streams. Of course, you know, the streaming relationships allow us to get physical uranium, which can be turned to cash over time as well. So we're always going to have some interests and holdings in physical uranium, but royalties and streams are that's the secret sauce in companies like Franco-Nevada and Wheaton. That ability to invest through royalties and streams is what we want to give investors exposure to.
Yeah, no operational risk. If inflation moves the price up, you get the full exposure. Broad portfolio is the right way, but yeah, you purchase 42 million of Yellowcake, you sold it. You made money, a lot of money in buying physical uranium. So yeah, to conclude, Uranium Royalty Corp is for those investors that are patient. They want to have 5 years, 7 years, or the entire life of one uranium company. I think that's the company. We touch a lot of things. If they want to find more, I will put the links to the website too, so every investor has.
Yeah, please do go to the website, uraniumroyalty.com. On the NYSE, we're traded as UROY, UROY. Again, it's been one of the best performing resource royalty stocks year to date, but I think we're still undervalued by a significant degree. So please take a look. And if you want more detailed information on the valuation of our company, H.C. Wainwright and Canaccord do research reports and produce target prices and valuations on the company, and obviously agree that UROY is going higher from here. So again, appreciate the opportunity, Luis, to visit with your viewers and listeners again. And again, it's just exciting times to be invested in uranium. So everybody enjoy this ride. I think it's going to be a sustained bull market here for some time, given the fundamentals. So enjoy.
Well, you hear. Thank you, Scott. I think that's the perfect answer to conclude the video. Thank you.
Thank you. Bye.